Hey gang, welcome to another one of these investor presentation reviews. This time I'm doing Lucid Motors, who's going public with Churchill Capital CCIV. Note that I am not a financial advisor. This is just some fun stuff I'm doing. Do not take this as qualified financial advice. Please talk to a qualified financial advisor if you want to invest in anything. And note that I do own some shares of CCIV. I bought it somewhere in the teens, sold some in the 30s and 40s. I still hold some. The reaction to the merger was sort of what you'd expect if you've been watching SPACs in the last couple of weeks. There's a run up when a rumor pops, then it kind of sells off post the actual deal. This thing was frothy to say the least. Kind of this is where I was buying when the first rumors came out around this potentially being Lucid Motors. This thing ran up into the 30s, stayed in the 30s for a bit, then really spiked into the 50s and 60s. And if you followed this at all, people were saying that this was a guaranteed $100 stock. You never want to take advice from anybody on the internet, including me. Clearly, if you were buying here, you're not feeling pretty good about it right now. But is this a good long-term investment? That's kind of what I want to look at as far as Lucid Motors goes. And to do that, I'll review the investor presentation. It just came out a couple of days ago, a couple of weeks ago, whenever this thing happened. Let's see here. Nice looking cars. What I like to do when I go into these reviews is kind of look at the company itself. What's their website like? What have they got going on? Lucid Air, I mean, that is a sweet looking car. Starts at 69K. Max horsepower is 1,080. It's got a projected range of 500 plus miles. So, I mean, the $69,000 model's only got 480 horsepower, a 406-mile range. You've got the Touring, which goes up to 620, costs 87.5. You've got the Air Grand Touring, which starts at 131.5 and starts at 800 horsepower. And then the Dream Edition, which is what they're kind of touting here, 1,080 horsepower, 500 miles range. I mean, this is a nice car, but it takes more than a nice car to make a company successful. I mean, if I'm looking at this with, their studios, Lucid Studios, they're really going after the Tesla market. That's clearly the comparative here. Sweet looking car, sweet engineering, high performance type thing. They are more luxury than anything, so it'll be interesting to see what kind of addressable market they claim and what kind of growth projections they've got going on. But, nice looking car is all I have to say. A lot of data here, clearly worth reading, if you are an investor, but this is not what the video is about. So Lucid's first product, the Lucid Air, is on track for expected production and deliveries in second half of 2021. See, I was thinking that they were going to start producing these things and selling them in spring. So this kind of means that they're pushing that back. From what I remember, I thought the initial production run was going to be spring. So one thing I like to look at is what are their prior SPACs looking like. So you've got Clarivate Industries, which is rocking at 22.75. I think they actually got bought out. You've got Skillsoft. I don't know what it sucks that they don't have a ticker here. I know Multiplan was a real disaster. You remember SPAC started at 10 bucks. This thing's at $7 now. And then the Skillsoft have a stock. 11 bucks. So performance has been okay. 176% return on IPO capital to date. They're claiming the high value of IPO capital. Okay, so Multiplan clearly returned some money if you were timing the market perfectly and sold it at 26%, but it was an 11 billion transaction size, pretty expensive for what that company does, but I'm not here to judge. So their value proposition, blah, blah, blah. I really want to know more about Lucid. So they have a legitimate track record. They've got, do they though? I mean, I guess the management team worked on the Model S and the iPhone. So boom, two great things. Lock it in, guys. These guys are going to succeed because those things succeeded. They've got validated technology, long-term success. They're manufacturing things in-house. Got an in-house sales and service network. Really, a lot of this stuff is just like, hey, we're Tesla 2, we're Tesla Junior. We have an attractive valuation at 2% of Tesla's current value, as of February 19th, 2021. Okay. All right, so they've got 20 million real world vehicle miles driven. They've got a lot of patents. They've got a 10 plus year design record, track record. A lot of good stuff here. Clearly amazing company. They've got 7,500 reservations as of February 2021. 650 million in potential sales represented by reservations. Although I think if you reserve a car, design yours, reserve. How much does it cost to reserve? So it costs, you put down $300, which I'm assuming you can get back. Yeah, so it's fully refundable, and it only requires you to put down anywhere from 300 to 7,500 bucks. So 650 million in potential sales. And 9.9 seconds to run a quarter mile projected, 2.5 seconds to travel 0 to 60. That's, these electric cars with their speeds are pretty impressive these days. My car takes like 12 minutes to go from 0 to 60. But again, I'm not riding a 2021 Lucid Air now, am I, guys? Oh my God, a 1.4 million views of Lucid Air global reveal. Wow, buy this stock right now. Market positioning. So what are they doing? They're establishing the Lucid brand. They're really targeting the luxury market. They're calling it post-luxury, brands that align with their values. So we're talking about luxury stuff that's also sustainable, whatever, refined, really fancy stuff here. They're targeting people who have money. They're not targeting me. Is essentially what it comes down to. I cannot afford a golden palace here. I cannot afford probably a $5,000 carrying bag and multi-million-dollar properties. Therefore, I cannot afford a $169,000 Lucid Air. They're pioneering post-luxury. They're going to define the Lucid brand with opulence, indulgence, elegance, and modernity. Modernity. Oh my God, my English is terrible sometimes. That's what you get for being a foreign immigrant. All right, so they're talking, hey, BMW is sports luxury. Audi is classic luxury, tech luxury. No, this is Audi, right? Mercedes, Audi, one of these, classic tech. And they're kind of in the middle. They're moving, they're including some of that, but they're moving beyond it. And they're calling Tesla as innovative, but not luxury, right? So this is Tesla, but more luxurious. Gold-plated Tesla, if you will. So it's got California cool, understated luxury. It's understated luxury, but it also kind of harkens to all of this opulent stuff. I don't know if it's understated. You're sort of pointing out that it's clearly overstated. It's a reflection of customer values. It's sustainable. It's got effortless performance, and then it's got a lot of freaking awesome technology is what they're saying. You got rockets, you got old cars, you got weird looking things. Um, Again, electric vehicles are all the rage right now. There's 20 different companies that are producing either electric vehicles, electric buses, electric trucks, whatever. It's certainly the future. It's just a matter of figuring out what's going to be the play in this space. And Tesla's got the first mover advantage in that regard. That's why they're valued so highly. They've got a lot of things going on besides the car. Car is obviously the main revenue generator right now, but battery storage, solar, etc. I think if you talk to people who like the valuation of Tesla today, they're not saying that, hey, they have 30 billion in revenue, so they should be valued at 800 billion or 680 billion after the recent market move downwards. They're saying Tesla is the future of all things electric. Battery storage, vehicles, solar, etc. Tesla's involved in all of that. Lucid so far, as far as I know, isn't. Doesn't mean they can't be. They're certainly working on their own battery. That's going to yield battery storage. That's going to yield better EV vehicles. But there's going to be 50 other EV vehicles by 2025. Is Lucid Air going to be the one that stands out? Maybe. It's a sweet looking vehicle and it's got the first mover advantage, but these are expensive cars and they're targeting an expensive market that is somewhat limited, right? A lot of people don't have the money to even buy a 69,009 base level car. So this is their first model. The Air establishes the bar for excellence across all Lucid products and experience. Starting price for AirPure after. All right, so this is after the credit. So that includes the $7,500 potential credit. So without that, it'd be more in the 70s, high 70s. So you get the Lucid Space concept, spacious, luxurious interior, compact, efficient exterior. It would be cool to sit in this car. I mean, that looks nice. You've got some pretty sweet space here. Are these the front seats? I don't, technical breakthrough, ground up rethink, more interior space for driver, passengers, and storage with a more sporty. Okay, so they're redesigning the inside. I mean, to me, it looks like a car. Maybe slightly more space in the front, maybe slightly more space in the back, but they're not, it's seats in a car, guys. Slightly more space. It does look from this angle that there's a lot of space. So it would be cool to sit in this car whenever they launch a showroom in New York City, which is a couple hours away from me. I'll check it out, but right now I'll just have pictures to look at. The interior themes are crafted with colors and materials that evoke iconic California locations at various times of day and night. All right, I mean, this is okay. I mean, if this is not understated, if this is if this is understated luxury, then I don't know what understated means anymore, because they are really laying it on thick that they've got colors from 12:09 p.m. in Santa Cruz and colors from 5:11 a.m. in Santa Monica and design choices from Tahoe at 7:01 p.m. and Mojave at 11:59. I mean, this is overstated as heck to me. It doesn't mean it's not luxurious, because it is, but that really stood out to me as a silly thing to say in an investor presentation. Glass canopy sweeps over the cabin. So this is pretty cool. I really like the glass canopy. I don't know if that means this car is going to be hot as hell, but it looks neat. I'm assuming there's some sort of sun modification in the cockpit. Beautifully integrated configurable infotainment system is a technical marvel. So they got their own infotainment system. It looks cool. If I think about what Apple's doing with the Apple Car, I know this is unrelated to Lucid, but this is the type of thing I would expect from Apple in terms of, hey, we have a high-end product, and within that product, we've got an Apple operating system. So I know there's been a lot of rumors about this and that, but is Lucid a possibility that, hey, I know Lucid's got its own infotainment system, but hey, Apple's working on self-driving technology. Apple's working on, Apple's already got Apple CarPlay and all that nonsense going on. Why not put it into a luxury car? Because Apple is sort of a luxury phone, the way people think about it. Whether or not you agree, it's thought of as a more luxury product across the board, whether it's headphones, whether it's iPhones, whether it's watches. They're more expensive, they're fancier looking. People think it's better. And that's kind of what Lucid is trying to be, right? It's more expensive, it's fancy, it's a luxury, it's post-luxury. Maybe Apple gets involved here down the line. Complete speculation, but if I were Apple, I'd be like, hey, this is a sweet car. If it's actually a sweet car and I could get my Apple OS system and Apple self-driving technology into a car, Lucid might be an option. Outstanding aerodynamics, battery efficiency. This is important in terms of, how good is your electric car. Battery efficiency is going to mean more and more, because people want more range before having to charge. Stopping at a charging station, even if it's a quick charge station, still takes some time. It's not as quick as just tanking up your gas guzzler at a gas station. The omnipresent gas stations, the ever-present gas stations, by me, there's a couple of charging places here and there. Most of them are Tesla, but I wouldn't know where to start when it comes to looking for a charge station. They're not like all over the place on highways or anything like that. So it's kind of off the beaten path, and more battery efficiency is important. And in terms of what they're showing here, Lucid and Tesla are ahead of everybody else, and Lucid's ahead of Tesla, right? So clearly the comparison still remains. We're the new Tesla, the better Tesla. We charge faster in terms of miles per minute. And we have better range with a smaller and lower cost battery pack than all of these other electric vehicles. And again, this is a Lucid presentation, so they're going to pick whatever metric makes the most sense to compare against other vehicles. So I'm not super familiar with EVs, to be honest, so it seems reasonable. All right, range, again, better range than all of these other cars, better range than Tesla, comparing against Tesla again. Top speed, not as good as the Tesla Model S. Whew. Come on, guys. What's this post-luxury nonsense if I can't even drive 200 miles an hour? And then 0 to 60 better than most except the Model S Plaid. How much is the Model S Plaid? Because they're talking about this is post-luxury. Is the Model S Plaid post-luxury? I mean, this thing has pretty beastly metrics. How much does it cost if I want to order it? I know I'm looking at Tesla paint. So this costs, if I want the one that actually rides, this costs 135 grand. So kind of similar to what Lucid is presenting with their, their fancy model. So, post luxury there as well. All right, so they're more luxurious than the Mercedes across all price points. Jesus Christ, 281,000, 261,000 for this beast. So clearly, from a price point perspective, there are cars out there that are priced the same way already, non-electric. The Air Dream Edition, Air Touring, Air Pure, Air Grand Touring kind of offers more in terms of performance for the price than some of these Mercedes cars. Various price points are available from 69K to 161K, all inclusive. That's inclusive of the federal tax credit that may or may not exist. So what are they doing? They're underpinned by the LEAP platform, Lucid Electric Advanced Platform. Support other vehicle variants. Okay. So they basically have a skateboard, kind of like some of the other EV brands like Canoe, which was another SPAC that kind of has their own skateboard. So they can potentially use some of this as a baseline for other vehicles, potentially lend it out to other companies that want to build their own car. Maybe, if that's the path they choose somewhere down the line, it's all in-house. They can use it to make other cars. You would think that they would be making other cars faster if they already have the base set up. I mean, all you really have to do is do the top, but I'm assuming they don't have the setup to kind of produce those cars and still make the Lucid Air. They have to build out their factories. This thing looks kind of weird though. The Project Gravity, I hope they kind of change the back, but SUVs on the EV side haven't been looking really good. Okay, Project Gravity, they're redefining sport and utility for luxury SUVs. Is this also understated post-luxury? So they're reimagining the SUV, the elevates the SUV, introducing Utility 2.0, again, maximizing interior space, and they use that skateboard we talked about. It kind of looks okay from like these areas. I mean, SUVs sell pretty well. Luxury SUVs, I'm assuming, sell pretty well, but this thing is probably going to start at like 79 grand, like some of the other cars. I mean, this looks pretty expensive. So they got some planned sedans, planned SUVs, other planned vehicle, but that's a 2030 thing. So they're going to start manufacturing this thing second half of 2021 if there's no pushbacks. And then what else can they have? Energy storage systems. Clearly, kind of mentioned that before. Tesla's already on that space with their Powerwall. Lucid seems to be doing something similar in the future, whether it's addressing home, commercial utility, energy markets. I mean, I think this is where the next value add comes for the EV companies. I think that's why Tesla is where it is. It's not because they make a nice car. It's because they are on the verge of a new industry, on the leading steps of the new industry, which is energy storage at home, in commercial areas, in utility, in other utility areas, uh, in addition to non-oil, non-gas based energy collection, whether it's solar, whether it's wind, whether it's whatever. And even if we're moving to an energy future that's not based on oil, gas, etc., we need energy storage systems to make that happen. And Tesla's doing that already. Other companies are doing that already. And it seems like Lucid knows that that's where the future is headed, and they're already thinking about it too. So that's good to see. And again, anytime you have more products, there's more economies of scale. You can produce more cars with that. That's kind of what they're saying. Clearly, this is like potential. They're not actually making this right now. So, you know, who knows how much of this is going to be included in their future revenue projections, because this is, who knows if they can make a good one. They've got a graphic here, but who knows? And then technology supplier. So are they going to supply technology to racing teams? Are they going to do mass productions for other things, other OEMs, whether they're using a wide range of applications, aircraft, EV, toll, military. So, a lot of other stuff, technology. They've got a nice battery pack. They've got transmission inverter, charging software. I'm not really going to go into the details here because I know jack all about EV technology. Production cell supply contracts in place. So they're not making their own cells. I think they've developed all of this stuff in-house, but they're having somebody else produce it. Wonder who that is. That's interesting. Um, in-house transmission. So it's good that they're building all of this stuff in-house. They're not kind of farming it out. And they've got their own production facilities probably that are doing all of this stuff. So they can certainly use this across multiple industries, whether it's drones, helicopters, aircraft, CVs, buses, heavy equipment, agriculture, energy storage systems. So it's nice that they're thinking about what else can we do with this technology. I mean, cars are difficult to make money on in the long run. If you look at the various car producers, the market doesn't value them as much as it values a company like Tesla. And I think that's because they see Tesla as more than a car maker. They see Tesla as a designer of future energy solutions, right? Whereas if Ford pivots to making electric cars, which they will, if GM pivots to making electric cars, they're probably going to make electric cars. They're not going to do other things. And if a company wants to be valued as more than a car maker, they have to do other things. Tesla does other things. It's valued as more than a car maker. It's valued as a technology company. It's valued at, 30x sales or whatever it's valued at this point, 20, might be like 20, 22, 23 at this point, because they're a car maker. If I look at what Ford is valued at, whoops, Ford price over sales, we're talking about sub one. Price is 11.7, price over sales is 0.37, and Tesla's at 22. So they're not valued as a car maker. Lucid's not going to be valued as a car maker unless they show that they're just a car maker and they can't take major market cap from some of the other luxury players. And it doesn't seem like they are content on just being a car maker, but right now they're just a car maker. So I think that's what differs them from Tesla at this point in their existence. And again, Lucid's barely coming into existence. They don't have a car on the road yet, so that's something to keep in mind as well. Charging speeds 20 minutes for 300 miles, and this is kind of what I talked about before. Great, 20 minutes through 300 miles. I don't want to sit in a charging station for 20 minutes. This has to get better if I want this car to take me across America. They have a partnership with Electrify America. What's nice about Tesla is that they have their own charging station network that's better for gross margins. This is going to be worse for gross margins. They have to pay somebody else to allow these cars to be charged at whatever. But there are going to be more charging stations. There's probably 7 or 8 SPACs out there that are taking charging companies public. So I think this is going to get better as these charging stations get better, as these batteries get better, as the technology gets better. And then they've got their infotainment system. They've got seamless connectivity. They support CarPlay, Android Auto, Amazon Alexa integration, remote access to various things, ID profiles for a personalized experience, predictive analysis. So I don't think these guys are talking about self-driving capability yet. Again, somebody's got to be there eventually. They've got a sensor suite, backup systems for advanced autonomous driving functionality. Never mind, they are talking about. So they do have autonomous driving functionality with software upgrades over the air, kind of like Tesla. and they're going to be collecting more data to kind of make that happen. Revolution in optical technology, great outward visibility. They've got some nice headlights. That's what this says. Got a rich patent portfolio, whether it's about battery, infotainment, HVAC, powertrain. Good stuff. It's designed for mass production on a scale hitherto not achieved. Very cool. Very understated. Their go-to-market strategy. So they've got 655 million in anticipated sales. They've got strong customer traction. I don't know if that's a lot. Like I don't remember what the Tesla launched with. I feel like it was more, like 7,500 reservations. Doesn't seem like that many. But the car hasn't really been a long-term launch at this point, and I think more and more information is going to come out on this car. So they've got 6 retail stores open with numerous additional stores opening in North America through 2021. So they're doing kind of the same type of direct sales and service strategy. That's one thing that I worry about with some of these like Tesla and Lucid. They have so few showrooms. They're so concentrated on car production. What if your car breaks down? Is it easy to get it fixed? I've heard some negative things about some of the EV makers, but I don't know. So they've got a bunch of places in Florida and California. They're building a place in Illinois. There's a Boston one. There's one in New York. So Gate of Manhasset in New York. So New York's coming. I'll be there to check it out when it does as a shareholder of a few shares of CCIV. I think I have like 65 left, 65 shares after I sold a bunch on the run up. So charging solutions, so they've got Lucid branded supply equipment so you can charge at home. And they've got community charging. So they got a plan with Electrify America for free for the first year. You can use the infotainment system and the companion app to find places to charge, and additional services are billed monthly to Lucid account. Okay. So they're compatible with network, leveraging charging standards of whatever. Okay, okay, okay. So they're comparing the Lucid strategy with Electrify America and the Tesla supercharger network. Looks like these are better voltage systems with Electrify America. They've got a higher max kilowatt capacity, and they're open source. So I don't know what any of this means. They're basically saying that, hey, the supercharger network is pretty capital intensive. This is not capital intensive. It's potentially better because as these new companies come out, they have better charging stations. They're faster, they're quicker, they're more powerful. And maybe this is true. You know, Tesla kind of builds their own network. It takes a bit of money to build that out. Probably takes a bit of money to upgrade it if needed. But once that capital intensive initial outlay is done, it's probably higher margin than what Lucid is doing. But on the other side, Lucid doesn't have to spend a lot of money up front and potentially doesn't have to spend a lot of money for these deals because a lot of these charging stations are probably giving you pretty good deals to grow in the beginning as well, and they can probably move around and get partnerships with other ones as other ones with better technologies come out, so they're not really stuck with an aging network like Tesla. They may be able to move to other networks if other networks become available, and they don't really have to spend a ton of money. And then the Tesla systems are kind of old. It's first generation systems. These are new second generation systems. All right, manufacturing. So they have a manufacturing plant in Arizona with production in the second half of 2021. I thought it was going to be earlier. One second. My dog is barking. And then, sorry about that. And then they're doing just leveraging their experience to get capital efficiencies, operational efficiencies. Great, great, great. They have a powertrain plant that's also in Arizona. They have a manufacturing plant. So they have phase one that's complete. They can make 34,000 units a year. They have 7,500 reservations. They're implementing phase two of their construction, which is going to make up to 90K units a year. And then at full capacity, this thing is going to be able to churn out 365,000 units a year. That's pretty good in terms of capacity to start at least. So I would assume some of these reservations would start getting filled, or maybe most of them, because if you think about it, if they start second half, depending on when they start, they could potentially make 10 to 17,000 vehicles a year this year, based on their overall capacity. If they start earlier in the second half, that could fill most of those reservations. I'm assuming they're going to get a lot more. They made a meticulous selection of their Okay, so they have water and sewer and road infrastructure, super. They have existing talent pool in the surrounding area. Very good. All right, this is what's important. So the global luxury car market was estimated to be 495 billion and is projected to reach 732.3 billion. Seems like a lot. Did we really spend that much money on luxury vehicles? Maybe. I'm assuming some of this data comes from somewhere. I thought I looked something up and it said that like luxury spend was like 16 to 17 billion in 2021. Maybe that's low. So by 2030, 9 years from now, they're expecting production of 500,000 units. So phase three must not be done for a while then. And they expect a market share of about 15 million units. But how do they expect to sell 1.7 million units? Oh, that's the total addressable market. Okay. In the electric space, in the electric luxury space. All right, so they're saying they're basically going to have 2% of the market share in 2021. Seems optimistic in 2021. By 23, they're going to have about 2% of the market share in the Lucid Air and also 3% of the market share in the Gravity. And then by 2030, they're going to have 4 or 5 or 6 vehicles out there. And then the 2 to 5%, 2 to 7% space in terms of market share. I mean, that's reasonable, I think. They're not expecting a ton of uptick on the Lucid Air, so that's good to see. Anywhere from 0 to 1% basically in the next couple of years. Whereas the Tesla sort of started high and trended down, which makes sense. Where are they now in terms of 2018, 19, and 20? Again, they're comparing this against the market share. Tesla market share 2020. Tesla has 0.8% of the global market share of all cars. And they've sold about 500,000 units. So they're sort of in a spot where they're selling 500,000 units today, and Lucid's going to be there in 2030. That's a long ways away to get where Tesla is today. But, Tesla's priced at a 650 million market cap right now. So if you can get there by 2030 and have a similar valuation, then I guess this would be a good return on the current investment with where CCIV is priced right now. Production volume, so they're saying they're going to make about 20,000 deliveries in 2022. So they're not really expecting to deliver cars in 2021, I guess. Even though they have 34,000 in terms of capacity right now, right? And they're making 20,000 deliveries, so they're not really using full capacity here. Then once they pop in the Gravity in 2023, they really start taking that up. So revenue, they're expecting 2 billion in revenue by 2022, so really nothing this year. Grow that at a pretty rapid clip. So by 2026, they're kind of where Tesla was last year in terms of revenue, slightly below. I think Tesla's revenue right now is about 31 billion. So they're at 9 billion by 2024, 2023. So let's just I mean, they're growing a lot faster than Tesla, but that's what we expected. Tesla grew at 30% last year. They're growing at 50, but let's say times 22, so that's 120. So what I did there is I took 5.5 billion in revenue times 22, which is the current Tesla price per share, price over sales rather, multiple. So if you believe these revenue numbers based on 2023 revenues, this should be a 121 billion company. Based on two revenues, this should be a $50 billion company, right? Obviously, there's some differences between those two numbers, but they're not really growing that fast between 22 and 21. So there's some upside there. Gross profit and EBITDA here and free cash flow. So they're basically burning money in terms of cash flow. They're investing money in the build out, CapEx, etc. Until 2025. They are getting a significant chunk of cash from this investment from CCIV. So this is going to mean that they are, even though they're cash flow negative for a while, that's kind of to be expected. Tesla didn't really reach profitability until this year, I think. So these guys are going to be profitable on the EBITDA level. Gross profit is better by 2024. So let's look at the overview. So they're getting about 16.3 billion bucks. 11.7 of that goes towards the existing shareholders. So blah 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 blah. So they're basically a 16 billion equity valuation, 11.7 billion with cash to the balance sheet of 4.4 billion. So valuing the company at about 12 billion with 4 billion in cash. But at the end of the day, it's a 16 billion market cap company based on the $10 price and 1.6 billion in shares outstanding, although the PIPE shareholders were at like $15. Yeah, so basically we're looking at 16 billion, closer to 12 billion in terms of net cash, slightly below that. That's at $10. So at $30, you're in the 45 billion range. At $30, you're in the 45 billion range. At six, that's an attractive valuation for something that hasn't produced money. So if you're kind of, let's say you're about a 15 at turn. So if this is assuming $10 per share, the stock is currently at $30 per share. Really, the simple math is that at 2022 revenue, EV over revenue, you're at 15x, higher than everybody else here. For 2023, you're about at 6x, higher than everybody except Tesla. So price point seems, fair-ish right now at $30. $60 would have been obviously overpriced. You'd be closer to 30 here. You'd be closer to like 12 here. That's kind of why the multiple compressed a bit and why $60 was a bit optimistic with where the valuation is. Again, this sort of comes back to, all of this stuff is at $10. Yeah, you're at 2.1x of 2023 revenue, but that's assuming you bought it at $10, which most of us didn't do. If you're buying it at $30, you're paying 6x 2023 revenue, which is still better than Tesla, but you're also purchasing a company that has nothing on the road, whereas Tesla already has $31 billion in revenue. So obviously there's different risks here, and I do own some shares of Tesla as well. I do own some shares of this, as I mentioned. I think this is an interesting company, but the valuation is fair to rich right now, simply because you don't know what this company is going to do, right? You sort of know what Tesla's about. You sort of know where their product pipeline is going, what they have out there, how it's going to sell, what else they have out there beyond cars. Whereas with the Lucid Air, they're not going to have a car on the road seemingly until 2022. They have these opportunities for other areas to invest in, like, home battery storage, lending out their facilities and helping other industries with manufacturing. But none of that is reality right now, and none of that seems to be talked about here in their pipeline. They're going to have different cars on the road by 2030, and they're going to have 2 to 7% of the market share, depending on the car in question. But Tesla already has some of that going on. And right now, you can buy Tesla at a 12.9x of 2022 EV over revenue, whereas for Lucid, you're paying 15x, right? So Lucid is going to grow faster, but you're paying more for that potential growth. For 2023 expectations, you're paying slightly north of 10 for Tesla. You're paying about 6x for Lucid. And this as of February 19th, and Tesla is down a bit since then, right? So that this is probably compressed more. So let's say this is, 11x now, you're paying 15x for Lucid. This is 9.9x, you're paying 6.3x for Lucid. So you got to think about that as you look at the stock price of CCIV. And does it make sense to value Lucid at a higher rate of 2022 estimated revenue than it does Tesla? Tesla's already got a bunch of stuff out there. Lucid has nothing. Does it make sense to value Lucid close to Tesla, or closer to Tesla and above NIO and some of these other companies? I don't even know what Peng is, to be honest. shows you how much I know about EV. Don't listen to me for investment advice. I don't know. I'm sort of in the spot where I bought Lucid at $15. I sold a bunch of it at 30 and 40. I have some left that I'm basically running at no cost because I've already made my cost basis back and then some with my sales. So to me, it doesn't make much sense to sell it right now because I think the upside's there. If they can execute on what's happening here, you're paying $45 billion for a company that in a couple of years might be approaching Tesla's capacity in terms of their ability to deliver high-end vehicles, and in terms of expanding their factories and expanding their production lines and doing something beyond cars. So that's interesting because this is a cool sounding company, but it also comes with risks, right? There's a lot of execution risk, and a lot of that potentially isn't being taken into account into their pricing. Sure, this looks good on paper because they're looking at it from a $10 standpoint. But once you start looking from it at $30 where it's currently trading, does it make sense to buy it at a valuation that's pretty close to Tesla? It's not that far below Tesla's estimates. Tesla's going to grow from here because they've got a cult following and they've got a lot of products that they have out there. You don't know that about Lucid. They've got a car that's awesome looking, but it's untested. They have 7,500 reservations, but who knows what that means. And they have a lot of unknowns around them. So I think it's an interesting stock. I think it's one I'm going to hold because I think there's potential upside here. And mainly that comes from the fact that I think with their technology, they're close to some of the other car manufacturers, but they also have the capacity to expand beyond cars. That's really what I want to see from companies like Lucid. Yeah, the car's cool, but eventually by 2026, the EV car is going to be more of a commodity than it is today. That's what I think. There's going to be so many producers of electric EV vehicles that Lucid might get lost in the shuffle. Ford's going to be making them, GM's going to be making them, Mercedes, Porsche, whoever, whatever you want to call it, post-luxury, subdued luxury, whatever. There's going to be a lot of cars in that space. And yeah, they're going to be producing more models, and potentially this car is going to be freaking amazing. And if that's the case, I want to be involved in it because then they can use some of that free cash flow that this car is eventually going to generate to expand into, battery storage, whatever. And I think that's an interesting proposition, but I also think there's some risks here. You know, Tesla's already doing a lot of that stuff. And if I want to be part of that, why not just buy Tesla? You know, the valuation here isn't that amazing because this is a company that's already priced at, you know, 45 plus billion at today's price in terms of market cap. And the revenue is not going to get anywhere close to Tesla until like 2027, 2028, right? And Tesla's already at 31 billion. So yeah, Tesla's 10x it's 10x higher, more than 10x higher than Lucid in terms of their valuation, but Tesla's got execution already. They're 7 years ahead in their plan. And 7 years down the line, Tesla's still going to be 7 years ahead, and their revenue might be head and shoulders above here. And post luxury, however you define it, is an easy way. Tesla can easily move into that. You know, right now, I think they're doing the right thing in targeting the lower end of the space. Lucid doesn't have a $39,000 car. I can't afford a Lucid. A lot of people can't afford a Lucid. Maybe that's good, maybe that's bad, right? If people look at this car, the people that are in the market for a $169,000 car and say, hell yeah, I want to get in on this, that's great because I think there's more margin in some of these luxury cars than there is in the lower end of the scale. And that's why they're projecting such decent revenue growth despite not having a high market share, because you don't need to take a ton of market share when it comes to $170,000 cars, you know? Um, so that's interesting. But I also want to see more from this company than just cars, because cars are difficult. You know, it seems like Tesla's winning the EV war right now, and maybe Lucid will win the luxury EV war, but I think cars are going to get more difficult as the years progress. You know, there aren't many awesome competitors to Tesla right now. There's going to be more by 2025. There's going to be a lot more post-luxury cars by 2025. And if these things are optimistic, then today's valuation might not be all that impressive. If they're not optimistic and they actually hit it, then, you know, if you're talking about a 2022 market cap, you know, a revenue of 22 billion, and the market's given it a price over sales of 22 like they are Tesla, that's a sweet return. That's a 10x return on your initial investment at 45 billion. Is that going to happen? I don't know. Is the market going to continue to give Tesla that sort of valuation? I don't know. I think that's a hard answer. Just let me confirm that Tesla is actually, yeah, they're 22, so I was right. Right, that's the thing, right? Just a couple of months ago, Tesla was at a price over sales that was in the 7 to 8 range, right? Now they're 22, but it could just as easily drop into the low single digits. And if that's the case, you know, if the valuation metrics change, then you're paying 45 billion for a company that in 2026, if it's valued closer to, like, let's say 3, is worth 66 billion. So barely any increase, right, in terms of your market cap, despite a ton of growth in revenue. And that's the thing that really drives this discussion is, you know, we're comparing it to Tesla. There are so many people that say Tesla is overvalued, and maybe it is. You know, Tesla went from a price over sales of 3 to a price over sales of 22 in a year or two, because the way people valued these companies changed. Now, if more competition comes in and Tesla starts getting hammered and the growth rate starts slowing down, that price to sales could drop precipitously. And if that happens, then all of the companies that are sort of compared to Tesla, like Lucid is, could follow suit, right? So now we're paying 40, let's say 45 billion for 2 billion in revenue, which is basically what Tesla's valued at right now. If that continues, you know, potentially by 2023, if their growth's there, this could double. But if the valuation metrics change and say Ford comes out with an awesome electric car and GM comes up with an awesome electric car and growth rates stall here, you know, not only is your growth rate going to be less than projected, your valuation is going to drop as well. So a lot of this talk about CCIV being a great deal is on the assumption that the price over sales metrics won't change, that this thing is still going to be priced at 22 plus by the time these revenues actually emerge and and materialize in 2026. And if that's the case, then hell, this could be a good opportunity to buy in at 30 bucks. But if those valuations tighten up, drop down, then your 45 billion investment might be 45 billion in 2026 because your price over sales is suddenly 1 to 2, right? It's not 22 anymore. Even though you're experiencing growth, you're getting that out there. Um, it's interesting. This kind of outlines what I was talking about. This multiple was basically 3 to 6 for so long, and then it exploded in the last couple of months. What's to stop it from going back to 3, right? And if that's the case, you're paying $45 billion for a $6 billion company, a $15 billion company in 2023, a $27 billion company, and then a $45 billion company in 2025, right? The multiples of Tesla were at 3 for the majority of its lifespan. It's only recently that they shot up. Is that the new norm? I don't know. Is that an aberration? I don't know. If you think it's the new norm, then Lucid might be a good investment here if they can execute on what they're doing. If it's an aberration, then Lucid's overpriced. So that's the high level valuation. Again, they talk about attractive valuation of less than 2% of Tesla's current value. Well, obviously, because Tesla's actually doing something. You guys have no product on the road and cool pictures and cool videos, but nothing out there in terms of a car that's actually being purchased by anybody. Now that's going to change in 2021 and 2022, but whether or not they can execute on their model, whether they can expand on the markets that they work in is the question mark. And really the big question mark is, are valuations for these types of companies going to remain where they are? Because they are getting a bit crazy. Some of these new SPACs that are coming out are valued at, you know, 10x of revenue that's not going to happen until 2024 or something like that. So that's great for the companies that are going public and getting all this cash, but it might not be so great for investors who are buying at a high. So for me, one of the reasons I sold out is because I already made 3x, 4x my money. And I was kind of like, well, this is very optimistic. And I'm happy to get that profit right off the bat. That's kind of why I like SPACs. You can get a pretty good return on more and on really hype. But beyond that, you don't want to get caught up in the hype and sort of assume that this is what the valuation trend is going to be forever. And that's why I'm less less than fully optimistic about this, and why I didn't hold my position forever. But I do think there's potential here, and I will hold some of these shares for the long run. But again, from my position, these shares are all basically at cost basis of 0 for me because I've made more than my initial cost outlay for all these shares. So my risk isn't huge. Obviously, if the stock goes down from here, if valuations tighten, then it is what it is. I'm happy to hold this for 5 to 10 years because I think that's kind of where their story, the timeline that their story will play out on. They're going to have to get production of these cars up and running. They're going to have to start selling these cars, introduce more cars down the line. And really, as they showed in their presentation, 2030 is when they're kind of up and running all along, right? And I hope that by then they've got a power wall type thing going where they have more than just cars on the street, that they have energy solutions that are addressing some of the needs of our planet, because Tesla's already got that in 2021, right? And Lucid's going to be a couple of years behind, but if they can improve on that technology, make it better, and become a big player in that space, and also in the automotive space, then hey, this is worth holding on. But I think you have to hold on for a while because there's probably going to be some misses. There's probably going to be some pushes in terms of where they're actually releasing these cars. I mean, I think the car was going to start production in spring. It's already second half of 2021. Is that actually going to happen? Is their car going to come? The second car going to come out in 2023? Are there going to be some revenue misses on the road? Yes. And I think Tesla was a story that took years and years to play out. And it was a story that you had to stick to for a long time to find the payoff. And the payoff happened in a big way in the last year or two. And Lucid might be a similar story. The people that invested at 10 and 12 already have a pretty good payoff because the valuation soared on the hype. but that hype is not going to get you across middling earnings results if those happen, or misses on delivery dates, or misses on number of cars sold, or misses on revenue. So you have to be able to stick out for a couple of years here to have the story play out. And if you're buying at 30, um, you're buying at valuations that aren't too far from Tesla. If you bought at 60, you bought at valuations that were higher than Tesla right now. And I think that was optimistic, which is why I was selling at that level. That's not to say that the stock won't reach those highs in the future, because it certainly could. Like I said, if the valuation of a company like Tesla stays in the 20 plus price over sales range, then this company that has a similar profile will certainly get up there in terms of a market cap into the hundreds of millions if they can execute on their revenue, and by 2026, 2027 be growing at a massive clip and hitting 20 to 30 billion in revenue. Then sure, even at 60, this was potentially a good long-term investment. But like I said, if those valuations shrink and the execution isn't there, then this could be a tough pill to swallow for a couple of years. So clearly, their expectations are, hey, we're going to be growing at 100% plus for a while, 80%, 50, 60. Revenue is going to be growing really, really nicely. Tons of capex here, but free cash flow is eventually going to get there. And this is really where I think the stock becomes a good investment in terms of um, overall growth from purchase price. But to do that, you probably have to stick out some years that might be so-so, because there's always growing pains when it comes to new companies. Tesla experienced those for a while, even more recently when they were missing growth targets, when stuff was going on, but eventually it paid off for investors. Will it pay off for Lucid? I don't know. It's a total crapshoot, to be honest. Anytime you have a company that has no product, you can't judge it based on assumed financials, right? You're paying 45 billion for something that's got nothing on the road. Is there a risk with that? Hell yeah, big time. But if valuations stay where they are for these EV companies and they can execute, this could be a good investment. If they shrink, who knows? Am I buying more at 30? No, because I think I have enough. My exposure is small, but it's enough for me. It's a $45 billion valuation for a company that won't have a car on the road until 2022. That's pretty darn high. So I think the risk is higher than the potential reward, because if valuations drop, which I do think they will personally, because 22 price over sales for Tesla is a lot, and or if their execution isn't there in terms of either the car not being as amazing as some of the Tesla vehicles seem like they are, or their expansion into different vehicle classes, and or their expansion into different businesses like battery storage fails, then this won't be an amazing growth story. If some of that stuff plays out well, which I think it could, which is why I'm holding my remaining shares, then this could be a good investment even at these prices. But these are pretty high prices. 45 billion is quite a lot. A lot of established companies that generate a ton of income don't get priced at 45 billion, and Lucid is there based on the hype around EV and a very cool looking vehicle and some potential. And that doesn't come without risk, but it can also come with a lot of rewards. So that's my take on Lucid. Like I said, I hold Lucid. I am not a certified financial advisor. Please talk to one of those if you have one before investing. If you don't, you should find one before investing, because any investments comes with risk of loss. Thanks for watching, guys. Sorry this was so long, but once I get a talking, sometimes I have a trouble stopping. If you have any investor presentations you'd want me to look at, let me know. Leave a comment down below. Subscribe if you want more of these videos. Leave a like, all of that stuff. I do enjoy making these videos, so I'll probably make them more often. I will get a better mic as well. I have one. I just moved. I just haven't set up my mic, so sorry about the mic quality if it sucks. Let me know what you think about Lucid. Let me know if you're holding, buying, selling. And good luck to all with your investments, and I'll be back with more of these investor presentation videos. Thanks, and have a good rest of your day, guys.